You saw it happen to gold because of the lower than expected inflation rate, the wholesale numbers, but consumer price numbers are coming out later this week. Gold went up $15. Now it's what, $2,677. And oil prices are now, Brent crude is around $80 a barrel. You go back to December, $71 a barrel. Why the prices go up? We're going to put sanctions on Russia so we can cut back the euro. Yeah. So oil prices are going up. It's a disaster out there.
In today's news recap, Goldman Sachs now sees $3,000 gold only next year as fewer Fed rate cuts slow 2025 price growth. Gold's record-breaking rally will slow down this year, with the yellow metal taking longer to reach the $3,000 level. But steady central bank demand remains a key long-term price driver, according to a leading investment bank. Goldman Sachs Group Inc. announced on Sunday that it no longer expects the gold price to reach $3,000 per ounce by the end of 2025, with the Federal Reserve's shallower rate cut path pushing the forecast to mid-2026. Goldman analysts, including Lena Thomas and Don Stuyven, wrote in the update that slower monetary easing will likely depress demand for gold-backed exchange-traded funds, ETF, in 2025. They now project the spot price to top out at $2,910 per ounce by the 2025's fourth quarter. The analysts added that weaker than expected ETF flows in December, driven by easing uncertainty after the U.S. election, also resulted in a lower starting point for gold prices into the new year. Opposing forces, lower speculative demand, and structurally higher central bank buying have effectively offset each other, keeping gold prices range-bound over the past few months, the analysts wrote, but added that demand from central banks will remain a key driver for prices over the longer term. Looking ahead, we forecast monthly purchases to average 38 tons through mid-2026. Goldman's economists now expect 75 basis points of interest rate cuts this year, down from their previous prediction of 100 basis points. The updated forecast is still more dovish than current market pricing as the bank sees underlying inflation trending lower. The analysts also said they were doubtful that the incoming Trump administration's policies will necessarily lead to higher interest rates. Now, we'll show you more clips, but first, subscribe and turn on notifications so you do not miss out our daily recaps, and check our NordVPN offer if you're a serious stacker, because keeping your browsing data safe from the government will be crucial moving forward. Also, check goldsilvermerch.com to get your gold and silver gear today. Premium quality shipping worldwide by Stackers for Stackers. Enjoy the episode.
On to the markets. The Dow was up today. The wholesale inflation numbers came in a little lower than expected. And so what does that mean? I mean, the guess on the street is that the Fed will only lower interest rates 25 to 50 basis points this year. We say that's not right. They're going to lower them more because Trump is going to do everything he can to ramp up this economy. Everything. And you saw it happen to gold because of the lower than expected inflation rate, the wholesale numbers, but consumer price numbers are coming out later this week. Gold went up $15. Now it's what, $2,677. And oil prices are now, Brent crude is around $80 a barrel. You go back to December, $71 a barrel. Why the prices go up? Because the fucking shithead scumbag politicians, we're going to put sanctions on Russia so we can cut back the euro. Yeah. So oil prices are going up. It's a disaster out there. And you read your economic update, and we're showing you what's going on in one country after another. One country after another. And what's going to happen with the tariffs? Trump came out today and said they're going to, pass a whole new legislative body to make sure these taxes happen, the tariffs happen. Again, I agree with the tariffs, just to make it clear. And as President McKinley had said, what do you want? Cheaper prices or higher wages? And I believe in self-sustaining economies. And you can see it by what happened with Russia. When little Joe Biden said we're going to punish Putin, they put sanctions on Russia when the Ukraine war began in February 2022. And we said Russia has all the human and natural resources they need to be self-sustaining. So all these companies that pulled out, the Starbucks, all these places, the Russian people took them up. And their economy is doing very well. But so inflation's going up as well. And then they're saying inflation's going down in Europe. And they got to lower interest rates. Inflation's not going down. You look at energy and food prices, they keep going up. Again, the numbers are rigged. People are suffering, and bad situations are only going to become much worse. And you know, we've been bullish on Bitcoin for years, and now Bitcoin went up almost some 4%, and it's back to the almost $96,000 a coin range. And again, on the economic update section, you know, we're looking at mortgage rates now. They're the highest in 6 months. In the meanwhile, corporate bankruptcies have hit a 14-year high. So mortgage rates are up, bankruptcies are up. And the reason the bankruptcies are up is because rates were so low before when they fought the COVID war, and now they're up. So it goes back that both of these things are connected. So again, we're forecasting that Trump is going to lower interest rates. He pushed the Federal Reserve to do it back in December of 2018, when the Dow had its worst December since 1931, the Great Depression.
In today's news recap, silver dropped as us 10-year Treasury yield neared 4.8%, highest since October 2023. Silver prices declined sharply by 2.15% to settle at 29.90 as the U.S. 10-year Treasury yield approached 4.8%, its highest level since October 2023, prompting a reduction in expectations for Federal Reserve rate cuts this year. Strong U.S. labor market data, including unexpected job growth acceleration in December and a drop in the unemployment rate to 4.1%, reinforced views that the Federal Reserve would likely maintain its current policy stance. The Labor Department's report highlighted improvements in key labor metrics, easing fears of market deterioration. Globally, the silver market remains under a structural deficit, with a 4% decrease in the deficit projected for 2024 to 182 million ounces. Total supply is expected to grow by 2%, driven by higher mine output from Mexico, Chile, and the United States, alongside a 5% increase in recycling due to heightened silverware scrap in Western markets. On the demand side, industrial applications, including electric vehicles, solar panels, and electronics, along with recovering jewelry consumption, are anticipated to drive demand to 1.21 billion ounces. Notably, physical investment is forecasted to drop by 16%, while exchange-traded products are on track for their first annual inflows in 3 years, bolstered by a 32% rise in spot prices this year. Technically, the market is under fresh selling pressure, with open interest increasing by 5.41% to 21,873 contracts. Before we dive into the best clips of the week, make sure to smash that subscribe button and check our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest and most reliable service out there. Just a few clicks secures your data and keeps unwanted eyes at bay. Plus, if you're a stacker seeking truly independent market insights, visit goldsilverstacks.com for our Stacker's Handbook, loaded with strategies to safeguard your financial future so you don't rely on commentators for market insights. Enjoy the episode.
Eurozone economy remains in danger, new data shows. That's right. And we have extensive articles in here. The reasons it's in danger, it's the same shit. Scumbag bureaucrats. The bureaucratic laws that these fuckfaces make up, they're out of their mind. And all they want is power. They're power-hungry little fucking freaks that never work a day in their life and just suck off the public tit. Oh, like Joe Biden? What did he suck off the public tit? Was he like 80 years old, 81 years old? He only sucked off it for 60 years? Well, that's all they are, a bunch of public tit suckers. What else do we have here? UK government's borrowing cost reached 27-year high. All right, we're mentioning this because they're saying that the UK, it's the FUCK because of the little fucking shitheads you got running it, is in stagflation. It's not stagflation. The economy's declining and inflation's going up. And dragflation is going to be one of your trends this year. You're going to see it continue to increase, declining economic growth and rising inflation. And what else? This guy, this mealy mouth, the guy in Argentina. This is a guy that loves Trump, brags about him, everybody bragging about him. Oh, he just released the tariffs in Argentina. But he did away with the tariffs? That's right. He's doing away with the tariffs so cheap products could come in. That's the opposite of what Trump is saying. He wants higher tariffs so manufacturing could increase in America. But what this guy's doing now, say goodbye to manufacturing in Argentina. Yeah, it'll lower inflation. That's right. And it'll lower wages as well. So that's what he's doing. But they don't talk about that. Each week we had the bigs getting bigger. And we said when the Trump administration comes in, you're going to see merger and acquisition activity, M&A activity increase because it was on a big decline when interest rates went up. Well, boy, oh boy, it's already changed. The M&A activity is increasing and the bigs are just going to get bigger.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.